Hello, ladies and gentlemen. Good day and welcome to the show. I'm glad to have you guys here. Now, I'm here to report to you guys that the action that you're seeing in gold and silver, and in cryptocurrencies too, maybe not so much just yet, it's coming for cryptocurrencies. But this action's just beginning. And what it is investors are finally starting to realize that the dollar's become destabilized and the whole global financial system right now is becoming unhinged, it's becoming destabilized as we speak. The silver market is on the verge of breaking right now. And what I mean by that is I've been talking for years now about a shortage in the 1,000-ounce bars. And, we're right there, right on top of it right now. The silver is the financial Achilles heel to the world's financial system because it's intrinsically connected to gold. And you know what we see happening right now is we see the upper part of the financial system, the Wall Street part of the financial system, all of these paper financial products and assets are on the verge of collapse. And we see a movement now into hard assets that have no counterparty risk. It's beginning. It's just beginning, guys. With the silver price still in the $20, it's still severely underpriced considering what's really going on in the world's financial system. But at the same time, we see this hyperinflation starting to come to the upper echelon of the world's financial system. We also see deflation equally as strong in the lower part of the financial system. And in fact, the banking system out there is undercapitalized in some cases. I mean, okay, they do stress tests and everything, and they say, okay, you're fine, you're perfectly good your tier 1 capital looks fine. But in reality, as this financial system starts to break apart, and we see a move into these hard assets, these banks are going to find out that their capital allocations are not adequate. So what's going to happen? Well, it's simple. The Fed's going to have to continue to buy everything. This all really started back around the fall of last year, when the derivatives market in the overnight lending at the lending window started to, and they had to go in and they had to prop it up. The Fed had to go into that market and pump unbelievable amounts of money in, and it was festering and it was growing all the time up until the new year, until we went into this new phase of this crisis, and now we're well into this new phase of the crisis. And of course, they're going to have to continue to keep hyperinflating Wall Street, and Main Street is going to continue to deflate. What does that mean for the gold and silver investor, for you guys out there? Well, I'm going to tell you what. This is the best of all scenarios for a gold stacker to profit. Because if the hyperinflation had come to both sides of the economy, Wall Street and Main Street simultaneously, you would have saw consumer prices shoot through the roof. And even though gold prices would have went up, the price you pay for everything out there would have went up too, equal to the amount that the gold price would have went up. But in this case, this is different. This is the Main Street economy sliding into a depression, an actual depression, not a recession, a deep, dark depression where nobody has any money, yet the gold price is going to the moon. You do the math. That's the best case scenario for a gold and silver investor that could possibly come. Now, when they hyperinflate, and they will, I believe there will come a certain point. Now, you got to understand how they think. They're extremely greedy. They only care about themselves on that side of the fence, on the Wall Street side of the fence. So right now they're hyperinflating themselves. They're feeding themselves money like crazy from the Fed. But meanwhile, they're letting all of us out here on Main Street just shrivel up. It's almost like a garden, and if the guy, he loved his tomatoes, so he goes on that side of the garden, he waters the tomatoes, and waters them, and waters them. In fact, they're overwatered. But on the other side of the garden, where the cucumbers are growing, he doesn't put any water, and they're drying up, and they can't get it. You're watching that side of the garden dry up. That's what's happening in the world economy right now. Main Street's drying up. And so prices aren't rising. Prices aren't shooting through the roof. That's because people don't have the money to buy it. We're on Wall Street. Their products that they have, gold and silver's on their side of the fence. They can afford to buy massive amounts of gold and silver. They can afford to buy cryptocurrencies. They can afford to buy equities. They can afford to buy bonds and treasuries. And they can afford to buy a money market, mutual funds, and on the list goes, derivatives and everything else, which is a big casino, by the way, an enormous casino. But, there's a movement happening on Wall Street, and they're taking the money now and they're shifting it within the assets that they buy, and they're shifting it. Some of the money is starting to come. I say some of the money is starting to come into gold and silver now. And why I say some is not all. It's not nearly all. It's only a tiny percentage is coming in so far. And you're seeing these movements that are exciting you guys. You haven't seen nothing compared to when the big money starts to really pour in. And they've created so much of this big money that they could hyperinflate gold and silver into a bubble. And that's what my show was about last night. It was where do you know when that bubble is starting to go into bubblicious? It's starting to become bubblicious. What price will gold be when it becomes bubblicious? It becomes a bubble? It's got a long way to go yet. But I figure when we get to a 50-to-1 gold to silver ratio, and by that time gold's probably going to be over $5,000 an ounce. That's when it's starting to get a little bit up there where it could fall some. But right now, it's just beginning. And a lot of these gold and silver people out there, were thinking there when gold was up there around 1800 or something a little while ago. They were thinking to themselves, the run's over, I've missed out, I've missed the boat. Well, now it's past 2000 and it's continuing to run. And if they hadn't listened to my channel, I was telling them that you haven't missed the boat. It's just beginning, guys. Back when it was 1800, I was trying to tell them, and gold and silver was back then. I think was 18 or something, 17 something dollars like that, and gold was like 1800. I was trying to tell them you haven't missed the boat. The boat hasn't left the port yet. Back then, I was telling them. Now the boat's just starting to leave the port, but it's got to travel all the way across the Atlantic Ocean. And right now, we can still see the port. We've left the port, but we can still see the port. We've only traveled a half a mile or half a kilometer. We got to go all the way across the Atlantic yet with this bull run. Anyway, okay, let's get in there and look at the markets today. Gold price today. It's 20.59. Now, it makes these leaps upwards. You notice something? Makes these leaps upwards. It's not coming way back down again now. It's leaping up and it stays up, and then it goes along sideways for a little while, and it leaps up again. This is the kind of action I was anticipating. This is the reason why they knew this was coming years ago. They put stops in on gold and silver because they knew this was coming. And when the real action starts, they're going to trigger the stops. I think the stop is at $3 in one day, I think it is, or $4 on silver. And then they stop the market for 15 minutes so they can give their buddies a chance to get in there and buy. I have to laugh at them. It's hard to say pushed it down all those years, it's hard to say pushed it down. and they made tons of money on pushing it to the downside. Now the sons of guns are going to make money pushing it to the upside. Now they're going to pump. They'll pump just as hard as they pushed it down. They'll pump it to the upside. So, anyway, so that's what's happening. The economy is split in half now. It took me a while to actually really see it. Even though it was right in front of my face, I can see it clearly now. It's just like a big walnut. The economy split right in half, and we have two economies now that are distinctly separate from one another. And this is what's creating this enormous wealth gap between Wall Street and Main Street. The big question mark in my mind is how far, there's 100 people on Main Street for every one person on the Wall Street side. How far are the people on Main Street willing to be pushed into a corner with no food, no water, sitting on a curb across the street from their home while there's a big foreclosure sign on their home? And how far are they going to let themselves be pushed into that corner? Will they react or won't they react? I just don't know. That's a big unknown. We're going to have to wait and see what happens with that. Okay, cryptocurrencies today. $358 billion. We're looking at a Bitcoin price of $11,842. And I don't see any movements to the downside on these coins. Ethereum's back up to $400. Bitcoin Cash doing good too at 313. Bitcoin SV is 239, and Litecoin is $60.43. So Litecoin has cracked the $60 barrier. Now let's see what the Bitcoin dominance is. It's low right now, 60.9%. I think we're going to see that move lower and lower as these other coins start to take more and more. And by the time we see a market cap in the trillions for cryptocurrencies, we're going to, maybe 3-4 trillion. Now, you heard me right, Instead of the 358 billion we have right now, we're probably going to see a market cap 10 times that high. By the time we get up there, you're going to see the Bitcoin dominance pull back probably to under 50%. And these other coins are going to take a lot of the money. They're going to start absorbing a lot of money into these other digital assets, these other coins, especially the top ones. The top ones are the ones to own. Don't go way down on the list and buy something like number 184 or something like that. Stick with these top coins because these are the ones that's going to make it. See, the same thing happened in the automotive industry years ago. When the Model Ts come out and everything, back Ford Motor Company and everything, the same thing happened. A whole bunch of little car companies sprung up all over the place. And most of all of them went out of business. And the big car companies emerged. Well, that's the same thing that's going to happen with the cryptocurrencies. So if you go down to like coin 185 on the coin market capital, you're risking it because they're like those little car companies that went out of business. If you stick with these top coins, say the top dozen coins or so, if your coin is one of those, you can even go out you can probably get out to about coin number 20 or coin number 30 even, And some of those are going to make it. Like, here's one right here, coin number 21, Dash. Really good solid coin. Zcash, another real solid coin. All these, Neo, IOTA, a lot of them are probably going to make it. Ethereum Classic, And you're starting to get out around coin number 25. But when you get out there, way out there into the hundreds, like when you go out here and you're talking about these coins like here, Travalic and Unibright and P Network and BitShares and number 111, these coins, Tomo Chain, number 112. When you get way out there, you're way out on a branch. It's like being on a tree. You're way out on the branch. And what happens to you if you crawl too far out on a branch? Snap, down you go. Okay, Dow Jones today. 22 points to the good side. So they're still pumping this market up. 27,224. Okay, crude oil, 42.32. down 13 cents on the day. And U.S. Treasuries, we're looking at falling yields today. We're looking at 0.52 on the U.S. 10-year, and it's fell 2 basis points. And the U.S. 30-year is at 1.19, and it's fell 2.7 basis points on the day. U.S. dollar index, they've stabilized the dollar right now. It's at 92.70. It's stable. They've also stabilized the bond market. So they're keeping the bond market relatively stable. They're keeping the dollar relatively stable. They're keeping the Dow Jones relatively stable. The powers that be are keeping these markets relatively stable. But they're not able to control the price of gold and silver right now. And we're seeing or Bitcoin. And we're seeing a movement beginning into these. And these is the canary in the coal mine. Okay? Thank you guys for listening to the show. Like and subscribe. And give me a thumbs up. And we'll catch you guys in the next show. Bye-bye.